Good evening, everybody. Long time no see. I'm finally home. No more trips to Vegas for the end of the year. I do have one more trip that I will be taking a little less than a month from now. So probably won't be able to post videos as frequently as I like to. So just be mindful ahead. Probably going to have a little bit of a lull, lack of videos coming unless I do things ahead of time. And I don't like doing that because I like to reflect on exactly what's going on in the market that day opposed to doing, pre-cut videos. But we'll see. I'll try to find something that is that works for everybody. Hopefully, you guys are staying warm. I know down here in Mississippi there is a not a heat wave, but a lot of cold weather that is coming our way. Last night it was cold; it was freezing temperatures. Then I think tonight it's going to be cold as well. Uh, the newsman said the average temperature is about 65 this time of the year, and then right now it's at obviously it's nighttime. You know, sun's down, sun goes down very early this time of the year. But it's 35 degrees right now, so we're expecting another cold night. It's saying 28 degrees tonight, so below freezing temperatures. So I'm sure I'm not the only one dealing with these cold temperatures. So y'all stay warm. Get some extra firewood for those of you who do have fireplaces, and get you some soup. We had gumbo tonight. That was perfect for a cold night like this. Fall is here. That means football season. I do want to talk about that real quick. So I typically love Disney. All their intellectual property. They tell great stories, right? I love the ESPN brand and everything, but I am a YouTube customer and I use YouTube TV. And this blackout right now is really pissing me off because one, I want to watch Monday Night Football. I think there's going to be a great game on tonight against the Eagles and the Green Bay Packers. You see my Lions hat on, so of course I want the Green Bay Packers to lose and lose decisively. I hope I hope the Eagles kick them in the mouth, and then Detroit can just ride off into the sunset with the NFC North. The Chicago Bears look to be doing pretty well, though, so we got to look out for the Bears, even though they've been beating up the teams that have losing records. So I'm not too concerned with them. But Disney, get your stuff together. Talk to Google, talk to YouTube, wherever you need to talk to, and get ESPN ABC back on YouTube TV. All right, end rant. So let's get into it. Let me share my screen. Let me put up my little face over here. Okay. So, but first, before we dive into the market specifically, I wanted to kind of talk about where we were on Friday and where we are now. So we talked about University of Michigan put out some data or some information about consumer sentiment, and is at essentially a all-time low. Um, I think a lot of that has to do with the government shutdown. We're going to talk about that in just a moment. On top of other things, tariffs, cost of living, housing expensive, groceries. We're just watching the news, and they were saying, I think it was since 2020 compared to now, grocery prices are up over 20%. That makes it very difficult, especially for folks who have families to feed and to care for. So I know everyone's out there. It's tough times right now, but if you're investing in the stock market, and I don't mean just your retirement account, say you put 5,000, maybe even a little bit less, $1,000, $2,000, whatever you had, and you invested in the stock market and you invested in the AI trade, you probably are doing pretty well this year. So I tend to think it's not necessarily one demographic that's struggling right now. I like to think of it as the people who are invested are doing much better than the folks that are not invested. And I like, again, I take away your 401ks and things of that nature. But if you had just some money set aside and you cut back on your traveling, your partying and all that stuff, you'd probably have some money that you could save and then put into the market. And if you did that earlier in the year, you have the stomach through the April low. but now stocks are darn near all-time high. So I think that's why I make these videos every single day. That's why I stress it's so important to invest in the market. Invest in what you know as well. Don't just throw money in the stock market because someone told you this is a great stock. Invest in companies, and you don't have to invest in individual companies. You can buy VOO, which is the S&P 500. And we'll talk about the S&P 500. You could have bought the Qs, QQQ. That has done well this year. So if you're not invested and maybe you're watching these videos and you're just on the fence, make 2026 the year that you focus on putting some money to work, learning how to navigate the market, what to look for, strategies to use, so you're not just guessing and just, like I said, listening to the taxi driver telling you a stock is going to do well. And if you want to learn proven strategies, winning strategies, you can join our Patreon. And there's a free version of the membership. We have these videos and other information that I put in there for free to kind of get you started. But then where you really want to get busy, it's only $10 per month. $10, like you do worse with $10, but $10 per month, you can get all of our strategies. There's a fundamental investing playbook, and in that is a list of videos. And I break down exactly how I look at a company. We open it up and we determine whether or not the company is fairly valued, overvalued, or undervalued. And then you can make your decision there. Whether or not you think it's worth investing in. There's plenty of data that I've put in there throughout this year. If you were rocking with me early in this year, I did on Sundays, we did a breakdowns and detailed breakdowns of companies. And majority of those companies that we broke down early in the year, they are up substantially. So if you were rocking with this early in this year, there is no way that you did not get $10 of value every single month just by reading the information and interacting what's in that Patreon. So make sure you join the Patreon. The link is in the description. But like we were saying, consumer sentiment is pretty low right now. On Friday, after we got that big dip, that big sell-off in the AI trade and the market as a whole, we were in the extreme fear territory, and 21 was the number we're at. Right now we're at 32. We're creeping into the fear territory, out of extreme fear. And hopefully we can get back to a neutral. I think by the end of the year, most folks are saying, because a lot of funds, folks that are managing other people's money, majority of them are actually behind the S&P 500 or how the S&P 500 is performing. So let's say the S&P 500 is up 15% this year. Most of those funds aren't even performing probably 10%. So it's going to be a lot of chasing at the end of this year. A lot of folks that are going to start buying, a lot of these funds are going to start buying these stocks that were high flyers to just try to show, yeah, see, we were invested in these companies. So it looks appealing for folks who want to get in next year. With that being said, I think the market is 100%, I shouldn't say 100%. It is highly likely that the market ends higher than closing the year lower than we currently are right now. We still have NVIDIA earnings that are coming up in about 2 weeks. Palo Alto is another company that's going to be reporting for cybersecurity. I think CrowdStrike reports around that time as well. So we still have some heavy hitters that still have to report earnings. And then I'm sure you've heard of this Santa Claus rally. We'll probably, like I said, we'll get fund managers chasing, and there'll be a lot of money thrown into the market, and we'll probably close, let's say the S&P 500 right now is at 68, I think. Yep, 68.32. We'll probably close, if not higher than 7,000, very close to that 7,000 range. So I did want to start with just showing you things are seemingly feel a little bit better as the government shutdown seems to be coming to a close. And so let's talk about that real quick. So this past weekend, a lot of the folks were supposed to be at home. You know, it's the weekend, their time off, but I guess they decided to stay in Washington, and the Democrats and the Republicans work together to try to come to an agreement or negotiate or figure out some type of deal so we can move forward in ending the shutdown. So currently, they kind of a few of the Democrats who were, I guess, were really eager from one reason or the other to bring the shutdown to a close. Um, they talked with their Republican counterparts, and then we had something that both sides felt they were comfortable with voting on. So right now, the vote is still um, currently going on to potentially end the shutdown. There are still a couple other votes that need to be tallied, at least as far from the last time that I was reading and researching. I know there was one senator. There was something in the New Deal that they're agreeing on, and it had something to do with THC and selling that across all the states. And that senator didn't want to vote on that. So I think that might stall a little bit. But it sounds like with the reporting that I've heard and the research and reading I was doing today, it is highly likely that this is passed by the Senate. Right now, they're currently voting in the Senate. Then it'll get sent to the House, and the House will more than likely vote yes for it. And then the president today said he will be on board. He will sign it into law if it gets to him. So to bring the shutdown to a close, Democrats moved off their stance of only approving a deal unless an extension on Affordable Care Act subsidies was agreed upon, and which is kind of shocking because that was something the Democrats were, standing on. They said they were not wavering from that. They wanted to have those subsidies for health care because they're scared the premiums and the amount that folks are going to have to pay are going to skyrocket. But Sunday, a new deal was introduced, which includes a guarantee by Republicans of a vote in December, so next month, on a bill chosen by Democrats to extend those subsidies. Now, House Speaker Mike Johnson, he raised eyebrows today saying, quote, "I'm not committing to or not committing to it." And basically, he's not committing to or not committing to that discussion in December when asked about a guarantee with Democrats regarding the healthcare subsidies. So there's still a little bit of gray area here, but hopefully, it gets passed by the Senate, up to the House, passes in up to the president, and then Republicans hopefully do hold up their end of the bargain and we have some type of dialogue or something is done about healthcare in December. But yeah, I'm not a big fan of politics, y'all. I just care about the market. But this is affecting the market. There's been a lot of discussion today on CNBC whether or not the government shutdown is weighing on the stock market. And there's people on both sides, and they're adamant that the government shutdown is or is not affecting the stocks. I personally seem to think it is because one of the guys talking, his name is Malcolm Etheridge. Somebody I respect. When he talks, I listen. But he was talking about a stock like Palantir and how it is heavily owned by retail investors. And he was alluding to the fact that a short seller, Michael Burry, he was a big guy that the Big Short, the movie's about him and shorting the housing crisis and how much money he made during that time by shorting the market. He's coming out and saying, he's bearish. He's putting puts on for to benefit on these companies' shares going lower. And Malcolm basically stated that he thinks that folks are listening to Michael Burry and starting to sell their stock. Retail investors, so if you're not familiar with a retail investor, this is just you and I, your mom and pops, your friends, your family. Now, you're talking about the institutional investors. These are these big corporations or fund managers that have millions and billions of dollars to invest. We are the retail investor. I guarantee there is out of 10 people, probably 2%, or excuse me, maybe 20% out of 10 people actually know who Michael Burry is, who is a retail investor. So I didn't really, I'm not with that example that Malcolm Etheridge provided. But in my point of view, those retail investors are potentially government employees, and just your everyday American who is feeling tariffs. Everything costs so much now. And these government employees, just if I had to guess, these folks are probably invested more so than your typical retail investor. So these folks are probably invested in the market. And so if you're not getting paid, or if you are getting furloughed, or if you're an air traffic controller and you don't have any money that's coming in the past two paychecks, what are you going to do? You're going to sell your stocks that have been running high. If you held Nvidia, Palantir, we're talking about Palantir. If the stock is up however much, 100% this year, don't you think that you would sell those stocks in a time like this so you have some money to pay your bills and take care of your family? So, from my mindset, the government shutdown is absolutely infecting the stock market. But, I don't have the data to back that up. It's just my personal belief. Like I said, there's people that think opposite sides. Tell me what you think in the comments. But let's discuss this a little bit further, the market overall. So we always start out by looking at the scoreboards. And the scoreboards are the three major indexes, the S&P 500, the NASDAQ, and the Dow. Now, all three major indexes were up today. NASDAQ was a lead, the tech-heavy NASDAQ up to over 2%. S&P 500 up over 1.5%. There's a NASDAQ, S&P. And then the Dow was up a little less than 1% today. So we did see a rebound in the AI stocks that were really getting hit heavy on Friday. Is there an AI bubble? The way that these AI companies are funding their businesses is with debt rather than cash. So there's so many things that to spook the market when the market is running high, and it seems like early in the year it just kept going high and higher and higher and higher. So a lot of folks are getting uncomfortable. They have a lot of gains and they're uncomfortable with how much their stocks are up. So when we get this hesitation or this nervousness, it's easy to see these high flyer tech stocks sell off. But today, because of the news that the government shutdown might be coming to an end, we see the QQQ bounced. The QQQ is the ETF that follows the NASDAQ. We showed the NASDAQ was one of the three scoreboards. The QQQ is an ETF, a fund that you can invest in and trade that follows the NASDAQ. I love the QQQ. Especially when the tech stocks overall are getting beat down. Head to QQQ, get you some QQQ, and then those individual companies that like the back of your hand, and you understand those companies, then dive into those companies as well. But definitely don't forget QQQ so you can get the whole basket, right? And it's not going to fluctuate as crazy as it would a individual stock. So it gives you a little bit more protection because there's a basket of stocks rather than just one individual stock. If that one individual stock goes down 20%, that's going to be a big blow to your portfolio. Rather, that QQQ, for it, the QQQ to go down 20%, the world is on fire if QQQ goes down 20% a day. But Nvidia closed up almost to that 200 range. It hit a high today at 199.94, and it closed at 199.05, up just shy of 6% today. Meta has been getting kicked in the mouth since it reported earnings. It's down 10% since it reported, it's down 10% the past month. And you see this dip right here when you see after it reported, and we've just been hovering down here for a while. I think eventually Meta will come back as long as the spending, we see some type of some revenue or some type of return for all the spending that Meta is doing. Meta was my number one holding. It moved down to 2, and I'm personally going to, at one point, I'm probably going to put in, if it keeps hovering around this 625 to 600 range by year end, this is probably going to be my stock pick for 2026 or one of them. If we don't get it too much movement back to that 700 area, at least 700, then I'm probably gonna put in a nice little chunk of money into Meta the beginning of next year, and that's gonna be one of my plays for 2026. So keep your eye on that. Amazon bounced back. They're after reporting their earnings, they were doing pretty well. They're up, down past 5 days because of the turmoil in the market, but for the past month, they're up basically 15%. So not bad. Uber, I've been talking about Uber. Robinhood is another good one. Was up 4% today. Vertiv Holdings is a partner with Nvidia. They're up 4%. I love this company. I kept selling it because it kept running high, and I wish I wouldn't have, because a lot of my shares are up over 150%. So when you're up that much, you got to start, ringing the register, getting some cash, selling some, get that cash, and then putting it into other areas in the market that you might feel are um, need a little bit of love in your portfolio. So always hold for the long term. Most of my companies that I've held over 2 years, those returns are over 100%. So this is a long game. Now we are going to talk about options here in a second, and that's really all about playing momentum. But long-term investing is our bread and butter. That is our foundation. And then the same companies we're investing in long-term, then we do option plays on them and we catch that momentum. Or we catch them when they're at a discounted price. We jump into options and let that thing ride. So the companies that we have options in, and the list goes from the most invested in options to the least amount invested. I want to say Nvidia will have just about 9,000 in options in a few contracts, and then Palo Alto, pretty much out of this, but we have one contract that's left. It's up over 100%, and it doesn't expire until 2027. Okay, same thing that goes with Nvidia. We've made money off of Nvidia. I think we made the most out of Nvidia in options than any other company this year. And we have two contracts that don't. One expires in January 2027, and the other one expires in December of 2027. So we have those things out for the long haul as well. Those aren't quite 100%, but I believe they're sitting around 40-50% up, and then I have pretty much a whole year to let that thing mature, and hopefully we see Nvidia at $300 a share, and that contract just will look real nice when I cash out. So if you want to get in to the options with us, we'll talk about a little bit more here. If you want to see our trades in real time and see a breakdown of why I enter a trade, and we look at the charts every once in a while too, then you want to join that Patreon, and that is the paid version. It's only $10 a month, like I said. But Nvidia, Uber, DraftKings, Meta, Amazon, the Qs, and Palo Alto. Now I should have gotten to the Qs on Friday when it hit 600, but I didn't trust what was going on. The stocks were falling, and I didn't know what the weekend might bring. Trump might post something on social media and it tanks the market even over the weekend before the darn thing can open. So I wasn't comfortable jumping in Friday. I was just going to wait and see what happens this weekend. And good thing is we got a nice turnaround. So I just let it ride out. If it does come back down a little bit more, we'll probably add on. We don't have a ton of cash. We're almost fully invested. I'm terrible. This is one thing I'm going to focus on in 2026, is always having more than enough cash for when opportunities come up. There's a lot of times where I feel like there's opportunity, and then I'll execute, I'll deploy some cash, and then sure enough, the thing falls even more, and then I'm just stuck with kind of like nibbling and getting in plays rather than really taking advantage or really going at it. So for 2026, one thing I'm going to do is be better at my deploying my cash, and always have a nice chunk sitting on the side rather than just deploying it whenever I first see an opportunity. So something that I have to better on, and hopefully, I can point you guys in the right direction and steer you right, and so you can do better than I'm doing. So that's pretty much it for the day. We're going to look and see how this government shutdown um, plays on. Hopefully, we have a resolution by the end of this week. Last thing we want is this to linger on until the holiday, and then, folks can't go and see their families because flights are canceled or delayed severely. That's the last thing we want. So, hopefully, we get some type of resolution, if not by the end of this week, early next week. And then I don't know what I'm gonna have to do. If I'm gonna have to send a nasty letter to Bob Iger and Disney, but this is a joke. I should be able to watch football on YouTube TV. YouTube, Alphabet, Google, Disney, figure it out. Peace.